In this regard, let's take a look at my favorite indicator, in my opinion, the most accurate so far. And yet again, we have quite a strong indication of this market tops. So how to identify the end of the bull market? Are we going to have an end of a bull market, or are we going to have a disrupted cycles, something that some people are now suggesting? These are the topics that I'm going to discuss today. And also I will be announcing the winner of the Ellipal giveaway, which I announced already last week. So make sure to stay tuned until the end of the video. Let's get started. Alright everyone, welcome to another episode of Crypto Corner with myself, OJ, crypto analyst and investor for the last 9 years. Now today in this episode I'm going to talk about a couple of things, mainly how to identify the end of the bull cycle, because I saw so many people already on social media starting to question whether we have topped out and whether this was it. And then other people were thinking maybe towards May or April, May, we're going to see the end of this cycle. So it's time to prepare for selling and everything. Or other people are even suggesting, no, we're not going to have the end of a bull cycle. The cycles are disrupted and we're going to just have short-term corrections, and we're going to continue, and we're not going to see these kind of 4-year cycles that we are used to, where we have 2 years of a bull cycle, another couple of years of a bear cycle with many corrections, the so-called long crypto winter. So are we going to avoid a crypto winter or not? This is going to be another topic of today. But first, let's start with how to identify the top of a bull cycle, the end of a bull cycle, because this is really important. It is the $1,000,000 question, right? And I actually dedicated this article here on my blog to that. And I'm going to quickly go through a few charts that I pointed out here in this article that will actually help you identify the top of a bull cycle, if we get the top of a bull cycle. Because after that, I want to talk about this article here at the Cointelegraph, which was posted just a few hours ago, that where they suggest, I mean, it's the investment chief at Bitwise, Matt Hogan, who is suggesting that we might actually not really see this proper 4-year cycle with, the proper long-term bull cycle, and then another bear cycle following it, and then another bull cycle, and so on. So it's a possibility. Whether it is a very likely scenario, it's another question, but it is a possibility. And also in the end, I want to quickly go through the Changely blog, where they actually gave us some price predictions for, up to 2029. And we're going to look at what they are predicting for 2025. And after that, to see where do we stand and how likely it is that to happen. But first, the charts. Now, there are a few charts that I'm going to share with you. There are actually quite a lot of charts that you can use in order to identify my market tops and bottoms and things. But I'm going to keep it simple, and I'm only going to show you 4 charts that I really like, that are quite accurate so far, and that have proven to be able to kind of give us a good idea of when we are at the top of a market. And these are all charts that you can access for free, because of course there are many charts that are under paywalls and everything, but this one here, this website, has a few of those that are free to use, and these are the ones that I'm gonna go through. So I'm not gonna force you into anything that is paid or anything like that. So MVRV Z-score chart. Why are we using this chart? This is an on-chain valuation tool that helps us identify when Bitcoin may be overvalued or undervalued. And overvalued, that would signal that it's time to sell, while undervalued means a good time to buy. So we are kind of at market bottoms. In other words, market tops and market bottoms. It compares market value to its realized value, which is the average price at which coins were last moved. And the Z-score above 6 typically signals overvaluation. And as you can clearly see here, we have market tops. The green line here is the actual price of Bitcoin as it moves. And we had here, first we had a market top in 2011. Then we had another market top first we had a market top here in 2011, then in 2013, then in 2014 we have another market top. 2017 is the next market top. This is the one that many of you probably remember already, because I know that some of you guys are following me for quite a few years, and we were together through this market top. This was actually the biggest bull run of Bitcoin, if you ask me, the strongest and the most powerful, even though not the biggest gains, but definitely one of the most exciting ones. Then we had another market top, which was the last market top. And every time we have a market top, we see a strong spike here in the MVRV score. So this is coinciding, and typically it goes parabolic, right? It's a spike. It's not just a peak, but it's a spike. I mean, we have a peak here, for instance, and this coincided with the local top, which was during the correction in 2019. In the late spring, early summer of 2019, we had a nice pump, and then after that, we went through a longer correction again. So this was not a market top, but it was definitely a local peak. And this local peak was coinciding with a peak as well in the MVRV score. But it was not a spike. As you can see, it didn't go parabolic. When it goes parabolic, guys, this is when we know that we have a market top. And you can see here, it actually coincided with the market top last time, with the market top in 2017, and with the previous market tops in the previous bull markets. So right now we are around 3, even below 3, but close to 3. This is still at the buy. This means we are still at the buy zone, guys. We are far from being topped out yet. And then in the same way as we are approaching market bottoms or hitting market bottoms, the score is dropping here below the baseline. So as we drop below the baseline, if you're monitoring this chart, you will be able to identify ideal accumulation zones when we are close to the market bottom or during market bottoms. Of course, nobody expects you to catch the absolute bottom or the absolute top, but with this chart, you can be anticipating when we are in the correct zone to buy or to sell. And you can really just do your buys and sells according to this chart. Not only, but combining this chart with some other charts that I'm going to show you is definitely going to help you get really good entries for both buying or selling. Now, the next chart that I'm going to discuss is the 1+ year hodl wave, meaning this chart is tracking wallets that are holding Bitcoin for over 1 year. Now, a decline in this percentage often indicates profit taking by these long-term holders as the prices are going up. So a little bit counterintuitive here, we're actually looking for drops in this chart. And if the metric is going up, if it increases in value, then it suggests that accumulation is happening. So these are market lows. So a little bit counterintuitive because it actually goes the opposite to the price. So as the price is going up, and if we are looking for a market top, we are looking for a big dip in this chart rather than a topping up. And of course, we are looking here at the orange line. The green line is the price of Bitcoin. The orange line is what we are looking at here. And yet again, we have quite a strong indication of these market tops. This is back in 2014. You can see that as the market was topping out, the orange line, the hodl wave, was dropping to its lowest. So again, 2017, market top coinciding with a drop, a bottoming in the hodl wave. And again, here, last bull cycle, market top coinciding with a bottoming in the 1 year hodl wave. So yet again, we can clearly see that. However, this chart might not be enough on its own because let's face it, right now, where are we? We are at dropping in the chart. We don't actually know as of right now how low this can go before we can call it a market top. Is this the lowest? Are we going to see any lower than that? So in real time, this chart alone is not enough to actually predict or to give us an idea whether we are currently at a market top or whether we still have more steam. And this is why we have to combine it with other charts. This is probably the least accurate chart in terms of real-time value. This is great for analyzing in hindsight. So if I'm looking at past performance and stuff like that, it's a great tool. but it's not such an ideal tool to use for real time, for just currently to know what's happening. So let's move on to the next one, which is the rainbow chart, the Bitcoin rainbow chart, rainbow halving they call it here. Bitcoin rainbow chart, I'm not looking at the standard rainbow chart because it was not made for Bitcoin, so it doesn't really have exactly the same way to evaluate price movements. But here you can actually see several zones, and it's also quite easy for people who are more visual, because we're going from cold to hot, from blue and green to yellow to orange, and of course the hottest being red. So of course intuitively, as we heat up the market, as the market gets really heated up, it gets into the orange and the red zones. As the market cools off, it gets into the green and the blue zones. And what happened? Let's just zoom into this chart first here. This is the first market top that we have on record. This market top actually occurred in the yellow zone. It didn't even get into the orange and red zones, but occurred in the yellow zone. So in that regard, the least that we are looking for in order to start worrying about a market top is coming into that yellow zone, and not just touching it barely, but getting quite into the yellow zone, closer to the orange. Now let's take a look at the next one. This is the 2014 top, and this one occurred in the orange zone, very close to the red, almost touching the red zone. So here, yet again, as we come into the orange zone, this is really our signal that we are getting really overheated, and we should be looking for a market top, or should be expecting a market top at some point. Now, of course, this is happening over time. This is not overnight, and it's not for a day or two or anything like that. So I will be showing you one more chart that is going to give us a slightly more accurate prediction in terms of when exactly are we topping up. But again, keeping an eye on these charts, you can already anticipate where are we and what's going to happen, or what is coming. So let's just zoom out and take a look at the 2017 and the last. So in 2017, we actually went into the red zone, properly getting into the red zone, properly overheating. And no surprise, guys, because we started the year 2017 with Bitcoin being priced at $1,000. We reached $5,000. We broke $10,000, and that happened, I think, in November. And then from $10,000 to $20,000, we jumped in 2 weeks, through the end of November or beginning of December into mid-December. We were already at $20,000, 19,600 or whatever it was. So we actually doubled in value from 10,000 to 20,000 in a matter of 2 weeks. So of course we went into the red zone. The market was super overheated. This is why I'm saying that this bull run in 2017 was the most epic, at least for me, because nobody expected that. I certainly did not expect Bitcoin to go way above $10,000, starting the year at 1,000. Because of course we've had, in terms of percentage points, the early markets were getting us bigger percentage points, but the price was cheaper, so it was easy to make 2, 3, 5,000% in a few months. But as we get into the thousands of dollars, it's not that easy to be gaining thousands of percentage points, and yet we managed to do that in 2017. Now, last bull market, we didn't get into the red zone, but we touched it. We got way into the orange zone for quite some time. We had a double top here, and the first one was actually where we got much more overheated. This is why for many charts, you can see that the first market top was indicating as the cycle top. But we did have a double top here. And in fact, the second top in terms of price was slightly higher than the first. Nonetheless, in terms of price action, the market got overheated, much more overheated during the first market top. And you saw in the previous charts as well, is the first market top that was showing us as the cycle top. So we managed to touch the red zone, and this was our indication that the market is way overheated. It's time to look into selling. So where are we right now? Well, we are in the green zone, guys. We're not even in the yellow. So again, This is showing us that we are far from having a market top right now, so we don't have to worry about that. Now, whether the market top comes in April or May, as many people suggest, or whether it comes in Q3 or Q4, as I would expect. I'm actually expecting that it's most likely that we're going to have an extended market that will take us into September, October, perhaps even November. So we'll see how this will play out. But it's definitely possible that if we see a strong acceleration in price over the next couple of months, we get into the yellow zone, and then we start thinking of a market top, because history is showing us that even just getting into the yellow zone is already enough to actually indicate a market top. We don't have to. We're not guaranteed that we will get into the orange or red zones before a market top. We might actually end the market in the yellow zone. So in this regard, let's take a look at my favorite indicator, the last chart for today, which is actually, in my opinion, the most accurate so far. And this one is the pi cycle top indicator. I really like this chart, guys, because it's an indicator, not a chart. And I'm actually using that indicator with Oryx and some other tools that I'm using, where I can actually just pull it up as one of the many indicators. But if you don't have Oryx, which is one of the trading chart platforms that I'm using, and I've showed you Oryx before, but if you don't use that one, you can just go here and use this chart. And so here we have two lines, two moving averages. One is cyan, the other one is magenta, and we are looking for a cross between these two lines. I'm not going to overcomplicate it and start explaining what these moving averages exactly are tracking and everything. What we need to remember is that we are looking for a crossing of the cyan over the magenta line. This is it. A cross between these two lines is actually showing us when we have a market top, and it's really, really accurate. So here we have that cross. We're not looking for the cross of the cyan going below the magenta. We're looking for the cross of the cyan going above the magenta. Okay, this is all you have to remember. And this cross, as you can see here, occurs maybe a day or two after the actual cycle top, which was here at 1,220 back in 2013. On the 30th of November. So this is the market top here, and literally the next day, or maybe even the same day, we are actually seeing the cross of the two lines. It is okay, it's not the same day, but it is a few days later. So a few days later, guys, this is really close, because as you saw with many of the other charts, you don't really have such a precise indication in terms of time, in terms of this week or today or tomorrow or anything like that. Now let's take a look at the next market top, which was 2017. And I'll need to zoom in a little more so that we can see it more clear. And a little more. Okay, so here we have the crossing of the two lines is happening on the 17th of December. This is when the cyan line is crossing over the magenta line. And let's take a look at when was the actual market top. It was on the 15th. So here, yet again, we're talking about a 2-day, in precision of 2 days. But also, what I like about this indicator is that these two lines are getting so close that even just a few days before that, you can already see that they're about to cross. So you don't actually have to wait for the cross to occur. Already here, a couple of days before, you know that the cross is going to occur, and you know what's happening. You know that this is indeed the market top. So you can take action before it happens, or you can wait and take action as it happens, if this is what you want to do. And typically these market tops happen at close to a round price. Many of the sellers, many of the bears are not actually waiting for the price to be reached. In this case, it was 20,000. So many sellers started offloading or shorting Bitcoin before it reached 20,000. And in this case, it really happened with shorting because the CME, the futures had just started. The futures market for Bitcoin opened just weeks before this market top. So for the first time in Bitcoin history, people were able to short it and short it heavily without actually having to buy the asset. Up until this moment, people had to actually buy Bitcoin on exchanges in order to sell it. And there were some margin trading orders, like Poloniex was doing margin trading, and maybe a couple of other exchanges, but you didn't really have a proper Bitcoin futures market where you are able to short it heavily like they did here. So this is why we had this big shorting of Bitcoin, and they never allowed it to reach 20,000. Most of this big money, people with experience and everything, they were shorting it as it approached the 20,000, because 20,000, this was a round number, psychological barrier. And this also happened here in the last bull cycle. As it approached 70K, which was a round number, they didn't allow it to even get to 70K. At around 65, and here at 68K, they started shorting it. Here, we had the crossing of the cyan over the magenta line already when we were at around 63,000. And it's true, we had a double top, so we did go a little bit higher. We went to 67,000, but in percentage points, it was just a few percentage more, like a couple of percentage points extra. So quite frankly, you didn't have to wait until then. You could have sold here and then forget about it and wait until we have a market bottom, which this chart is not going to show you, but the other charts that I showed you earlier are the ones that you can use to indicate a market bottom. And if you do that, if you just buy at the absolute market tops and market bottoms, and by absolute I mean when we're in the range of a market top and a market bottom, this is good enough, guys. You can make a ton of money this way. So now let's take a look at where we are currently. Well, the two lines are not even close, guys. So we are yet to see the two lines approaching, getting tight, getting tighter, doing something like what we did here, getting tight and starting to get really close together, and then we can anticipate a market top. Now, I'm going to talk about whether we will in fact see a market top at all, or are we going to change how the cycles are going. But before that, let's pick the winner of the Ellipal giveaway. Now, this is a giveaway that I announced in this video. This is a video where I talked about how to protect your seed phrase, because many of you guys are still neglecting that part. Yes, you're using cold wallets, which is great. This is a very good way to protect your crypto, but you're not really securing your seed phrase enough. And I keep reminding you guys, you have to secure your seed phrase even more than what you do with your cold wallet, because you can lose your cold wallet, it can get damaged, it can malfunction, or it can get stolen, destroyed, whatever. It doesn't matter. You can get access to your crypto with your seed phrase with another wallet. You just import your seed phrase into another wallet and you have access to all of your crypto. But if you lose your seed phrase and then your cold wallet malfunctions or gets stolen or whatever, you've lost your crypto forever. So do not neglect that part. And with the wildfires in California recently, we were reminded again of the importance of securing that seed phrase, not just writing it on paper, because it can get burnt easily. With these metal plates that I was talking about in the video, you can secure that seed phrase. At least you know that it's not going to get destroyed by accident or anything like that. It can still get stolen if you don't keep it, safe enough, but at least it's not going to get destroyed in a flood or a fire or anything like that. Ellipal, when they found out that I'm doing this video, they decided to do a giveaway of their metal plate, which is by a solid steel. I talked about this. Go and watch the video if you don't know about that. But I do have a winner, and it is Cara Coco, who commented, "Wow, this is fantastic. I had no idea. Thanks so much for sharing this super important information. I definitely need one. I still have my seed phrase, but it's only written down on paper that was with my storage wallet. And I'm saying congrats now because she is the winner." All right, Cara, so you are the winner. Congratulations. Thanks for leaving this comment, and thanks for everyone else who left comments. I've actually seen many comments from Cara, so I know that she's been following this channel for a long time. And this is another reason why I decided to reward you, Cara. So thanks for leaving a comment, and thanks for being part of the Crypto Corner community for so long. Now, if you want to win, guys, just keep watching this channel because I will have more giveaways coming up your way. Now, let's talk about this article here in the Cointelegraph, which is discussing the possible change of the Bitcoin cycles. It is Matt Hogan from Bitwise who is actually talking about this. He's referring to a new executive order that was just signed by Trump that is encouraging banks to actually start getting more into the crypto space, because for the time being, as you know, banks are still largely hostile to crypto. So Matt Hogan is saying that crypto exchange traded funds, the ETFs, were big enough to bring in billions from new investors, but he's convinced that the Trump's executive order will bring trillions into this space. I'm not really sure about that. I must say that I don't quite share his sentiment, but he's basically saying that the industry, even though it's not going to completely overcome the 4-year cycle, he believes that any pullback will be shorter and smaller, shallower, he says, than in the years past. What does that mean? He's basically suggesting that we are not going to have a full-on bear cycle that, like previously, it goes for over a year, and then a full-on bull cycle that goes on for a good couple of years. But he says the crypto space has matured, there's greater variety of buyers and more value-oriented investors than ever before. I expect volatility, but I'm not sure I'd bet against crypto in 2026. He means that we expect 2026 to be a bear market, and he says that he wouldn't be shorting crypto in 2026. He doesn't think it's going to be a full-on bear market. I don't know. Do you share that sentiment? I personally don't. I still feel that we're going to have a bear market, and it might not be as long as before. We might not see a 70 or 80% correction as before. So I agree that it could be shallower. But in any case, I do agree that once the shorting starts and once the bear cycle starts, it will be a proper bear cycle, because it has a ripple effect, meaning people get scared. You know, the sentiment shifts, and people start being worried about Bitcoin losing value, and they start selling. And then as the price is dropping and dropping, as people see that the price is in the red, they don't want to buy. Most of the people, most of the investors are too scared to buy any asset when it's in the red. They actually want to see green performance. They want to see that it's in green and it's on surplus in order to start buying, accumulating. This is why when Bitcoin goes to a new all-time high, this is when everyone starts talking about buying Bitcoin. When Bitcoin first hit 50,000, so many people were like rushing to buy Bitcoin. Even last year, when Bitcoin jumped from 30,000 to 50,000 in a matter of 2 weeks or something, or was it even quicker? This is when people started paying attention again. When it was at 30,000, people were not interested. I got so many people calling me to buy Bitcoin when it was around 50K, and it had just jumped from 30. And I was like, why you didn't think of that 2 weeks before? So most people were waiting for a big jump that basically shows them, oh, this thing is awake. And then they jump in. So yeah, let's see what is the Bitcoin prediction for this year by Changely. Changely is one of the platforms for fiat to crypto and crypto swaps and things like that. It's an exchange, even though it's not exactly the kind of exchange that we know. It's more about swaps rather than, placing a spot trading orders or anything like that. So I don't really use Changely, but it is in fact one of the services that you will find in many DEXs, in many wallets, some of the cold wallets that offer you instant swaps within your wallet platform. They're actually using Changely. So it is a very popular platform. And they did here a Bitcoin price prediction. And funny enough, they're being very conservative. What I'm seeing here is that the highest they expect Bitcoin to go is around 127,000. And this is for January this year, which ended already. So we didn't really go to that price, but it could be that they, let's assume that they're wrong in terms of timing, but about 130,000 Bitcoin this year, I think this is reasonable, and I think it's a very conservative measure. It's an expectation that I share. I personally feel that 120 is easily achievable. I even think that at this point, 150 is something that I can anticipate to reach during this year. But funny enough, I don't see any higher price for the rest of the year. So according to the Changely blog, 2025, that's it. We are not really seeing anything above that price. And then 2026, which I expect to be a bear cycle, they also seem to expect the same because they go to around 99, 96. Funny enough, they go back to the 120 and 130 even range towards the end of the year. So if we have to trust this forecast here, we're going to have an extension of the bull cycle into 2026, where we're going to have even higher prices than what we're going to see this year. I don't share this sentiment. In 2027, we are actually starting bigger pumps, and we're going to 150 and 160 and 170 and so on and so forth, going into 2028 where we go above 200k, 270, 280, and in 2029 they expect that we are going to cross the 300,000 mark. So now, I don't really take this seriously, guys, and I don't think you should be taking it seriously, but I just wanted to show you that according to this prediction here, it kind of lines up with the article where we are probably, at least they expect that very likely we are not going to see a proper bear cycle anymore, but we are just going to have this volatility where the price is going up a little bit, then it's dropping back, it's correcting back by 20-30%, and then it's pumping by another 20-30% and dropping by another 20-30%, and we never really have a 60 or 70 or 80% corrections, which is what we had in previous bear cycles. And we never have a 50, 60, 100 or 200% pumps, which is what we had in previous bull cycles, but we actually go much more smoother. We go much more steady. And we add 20-30%, we correct. We add another 20-30%, we correct. So this is the sentiment that some analysts are sharing right now. Personally, I still expect that we are going to see a much bigger bear cycle than what they predict, because let's face it, even with the ETFs and with all the institutional investors eager to buy Bitcoin and pump billions of dollars into Bitcoin, they also want to buy it cheaper. So for them, it will be very lucrative to short Bitcoin during these bear cycles, to bring the price down as much as they can, and then load their bags, which is also what we're going to be doing. We're going to be monitoring the charts that I was showing you, and we're going to be looking at the Pi cycle to find out when is going to be our local top here, our market top, so that we know when to offload. And then we're going to keep monitoring the price, looking for the ideal bottoming of the market so that we can jump back in. Stay with me, stay with Crypto Corner. If you're not yet subscribed, hit that subscribe button. All of my content is for free. And you can also join my newsletter. I'm posting my newsletters once a month at the beginning of each month, where I do market analysis and I talk a lot of things that are not really making it into these videos. So it's different content. Make sure to subscribe, grab the link from the description below. And I hope to catch you in the next video.